Realty Income was a stock that was beloved by dividend investors just a few months ago, but in the last couple months there's been a rapid sentiment change surrounding the company. Everybody's saying it's too slow of a grower, that interest rates are going to kill real estate, and that Realty Income will go bankrupt. The stock is currently trading at a 52-week low and could have some serious long-term value at the current prices for us dividend investors. And if you want something that has long-term value, the best investment you can make today is hitting that subscribe button for me. Well, in the last few weeks I have been accused of pumping target stock at 1,000 subscribers. Come along for the journey on the channel. I promote real man's investing and actually looking at businesses before we invest and not buying off of fear. Now that you've done that, roll the intro.
Hello, I like money.
Right now, Realty Income is trading at a 52-week low of $51.56. Over the last 5 years, Realty Income hasn't even made a positive return, down 6%. I have noticed a very fast and a very sudden sentiment change regarding Realty Income. I often hear things like Realty Income is too slow of a company, you're not going to get a good total return compared to the S&P 500, and as a younger investor, you should be looking at other opportunities. I would agree to some of these points, but a lot of this sentiment change is coming with no change to Realty Income's business fundamentals whatsoever. Nothing has changed with how they operate their business, which is a big issue for me when it comes to why their stock has been declining. Realty Income has very solid tenants, which we'll get into. They have staple properties that are used by millions of people every day across the world, that are essential for communities across the world, and have a very strong tenant base. Let's get into the type of properties and what their business actually looks like. I also think it's important to note that I have made a Realty Income stock review video where I go much more in depth on the business than I will in this one. This is more of a price analysis and what's been going on in the short term, but if you want to check that out, you can check it out in the top right corner right now. Realty Income has a 99% portfolio occupancy rate, which is very, very impressive. Realty Income has over 12,400 commercial triple net lease properties. Now, triple net lease properties are important to note, as Realty Income isn't responsible for any of the utilities, damage to the property, etc. They also save a lot on taxes and other insurance claims, and Realty Income's tenants are separated over 84 different industries, which is awesome to see, and they have over 1,259 different clients. Realty Income also has very well geographic diversification as well, with Texas being their biggest region along with the United Kingdom, then California, Illinois, Florida, Massachusetts, and Ohio. 82% of their portfolio is in retail, which is a bit of an issue, and I think that might be a reason to the sell-off right now. A lot of retail has been struggling a whole lot recently, like Dollar General, Walgreens, Target, and a lot of other stuff. A lot of this is due to theft and shrinkage, and a bunch of short to medium term issues in my belief. Over the long term, I think they'll all get it figured out, and retail is here to stay. That said, though, some of their tenants have been facing a lot of issues, such as Walgreens, as I mentioned. We can see their biggest tenants right now are Dollar General, Walgreens, 7-Eleven, Dollar Tree, and FedEx, and those are all companies that have been struggling a whole lot recently. So there is probably some fear amongst investors that are selling out of this, that are looking at the tenants of Realty Income and saying, hey, I'm not too sure about these businesses, as a lot of investors are right now, and I might just sell out at the moment. I think that's a big reason for the part of the sell-off right now, is their high exposure to retail and some companies that have been struggling a lot recently. But if you're looking for diversification from Realty Income, we may have got it. Realty Income just recently invested $950 million into the Bellagio, so now they're getting diversification into Las Vegas and more experiential-based real estate, and basically copying Vici, if I'm being honest. I think this is a good move for the company, though. Obviously, Vegas is here to stay, and this is a good property to add some diversification to that cash flow that's coming in. Realty Income has also made some other investments into other areas when it comes to experiential-based real estate, so investors are panicking a little bit right now as we are in a higher interest rate environment. Something to keep in mind here is that Realty Income does carry a whole lot of debt. This is normal though, mainly for REITs, but there has been a whole lot of more debt added recently due to these acquisitions. Right now in the market, companies that carry a whole lot of debt are not being favored well, as there are potential fears of us going into a recession, but I do think over the long term, these companies will most likely be fine. Obviously, companies that carry more debt going into a recession have a higher chance of going bankrupt, so there are some real risks there to companies that carry a whole lot of debt. But when it comes to REITs and real estate companies, it should be no big issue whatsoever of them carrying debt. Taking a look at Realty Income net debt, ever since December of 2021, they had a massive jump of 73.88% in their net debt overall, from $8 billion to $15 billion. Looking at this, you would assume that Realty Income is going to be cutting their dividend very soon and that they're going bankrupt. But it is very important to always be doing your deep research on this and understanding why there is more debt into these companies. To start off, they do carry a lot of debt, as I mentioned, as most real estate companies do, but we could see that there was an unusually high jump in Realty Income's net debt overall, nearly doubling. Over the last 2 years, as I mentioned, Realty Income has invested so much money into building and acquiring new properties overall, and overall just diversifying their business for the long term. For the long-term shareholder, this is good. But in the short to medium term, Realty Income stock will definitely see some pain as they do carry a lot of debt during the time. So right now, hopefully they're raking in cash flow, they continue to pay these properties off, and they get their net debt back down to prehistoric levels. Another thing that I've been seeing a lot of investors complaining about is the recent big hike in the share dilution as well. Now, typically, share dilution is normal for real estate companies. You don't typically want to see it with your normal stocks and businesses that you invest in. But with Realty Income, basically the way that they raise the money to put into these new properties and acquire new properties is by actually diluting the shareholder. So this is typically normal, and this will pretty much follow in line with that debt. So there has been a big recent hike, but as I said earlier, this is mainly just to take out new money for new acquisitions of properties, which they've been really vamping up over the last 2 years. Short term, this is not good, but long term, I think this will pay out for them as they're going to get more diversification when it comes to their tenants. Alright, so is Realty Income's dividend truly in trouble? I'm going to be the first one to say this, they're not cutting their dividend. If Realty Income cut their dividend today, the stock price would fall over 50%. Literally the only reason you're investing in this is for the dividend. Right now, if you're also buying, you're probably going to secure a decent total return over the long term, as I believe these prices are a solid time to entry, and I'll explain why. Typically for our companies, we like to look at the payout ratio and the free cash flow for regular companies, but Realty Income is not a regular company, they're a REIT, and for REITs, we like to look at adjusted funds from operation when it comes to our financial metric for them. Free cash flow just is not the same. Right now, Realty Income's AFFO payout ratio is 76.49%. If we looked at their net income payout ratio, it would be something like 150%. Obviously, that's not true. We need to look at the AFFO payout ratio to see our true earnings that are being redistributed back in the form of dividends. Another thing to mention with Realty Income and their management is they will do anything literally, and I mean anything, to keep that dividend payment rolling. So dividend, I don't love when dividends are the only, thing when I invest for a company. I want to obviously invest for free cash flow growth and total returns, have dividends be the outcome. But when you have a company that relies on the dividend like they do, literally their name is the monthly dividend company, I think they put a lot of effort into maintaining that dividend, and literally every strategic action and move that Realty Income's management is doing is to basically preserve and continue that dividend for 50, 60 years. So basically, I also like to look at free cash flow for companies, but as I mentioned, for real estate, it's different. We'll look at the AFFO growth. Right now, Realty Income's AFFO growth is 5.69%. Their AFFO growth historically, when it comes to their 5-year CAGR, is 5.08%. So a little above inflation, but nothing crazy growth. You're not investing in Realty Income for the crazy growth that you're going to see. You're going to look for more for stability. So 5% growth is decent from them. Alright, so here are my thoughts on Realty Income. I'm going to be truthful here. Realty Income, I already have a pretty sizable amount in my portfolio, but that has been declining as the stock has been pretty, on a discount recently. With that said, though, these prices are really attractive, and yes, I understand that Realty Income has underperformed the S&P 500. Right now is probably not the best time to be looking at it, but even if you look at its 5-year average, around $60, $70, it's still underperformed when it comes to total returns. So, Realty Income, it's not a position that I would love to have as a core holding, but I think at these prices, I can lock in a pretty solid return over the long term. I also do believe in their business, and I don't think they're cutting their dividend anytime soon. I don't love investing in businesses and stocks just for the dividend, but Realty Income does have a pretty strong underlying business overall, and it's a very simple business to understand. They just collect rent month over month from their strong tenant base that communities, as I mentioned, rely on, and they distribute it back in the form of dividends. Their dividend growth is nothing crazy either, so there's definitely a chance that this week I add more to my Realty Income position. If you want to see if I buy any this week, check out my portfolio update that will be out next week on Saturday. I want to thank you for waiting to the end of the video, and if you also want to see all my buys, sells, and more in real time, join the Discord link in the description. Also, if you want to help support the channel and join a stock market competition that we have going on from October to the end of the year, become a channel member today. Thank you, and of course, do dividend stocks, not drugs. God bless.